Let's bring our analyst on, see what he's got to say about it all. Let's bring in Mr. Craig Bolanos. He's a co-founder and partner and wealth partner at VestGen Wealth Partners in Chicago, wealth advisor, I guess I should say. A mouthful for me at this time of the morning, but anyway, we're just happy to have you on. We've seen a little bit of a rally. The oil's off a little bit, equity's higher. What's the playbook for today, do you think?
Well, yeah, I think the playbook specifically for today is if you're an investor, go into the weekend with incredible confidence. I mean, we got two pieces of news here this week. I mean, one, the earnings continue to run so hot, especially in the technology sector. I think that's good news. And part number two, the fear of the Fed raising rates later this year. You go out to that CME FedWatch tool, it's dropped dramatically. Maybe it was that GDP print that revised it down a bit, pushing back against the fears of a quote run hot economy. I think that was good news. The PCE, the personal consumption expenditure, running a bit hot, but that was to be expected. But overall, if we're positioning for an accommodative Fed, that's what this market needs. And I think the peace deal or the lack thereof, listen, whenever we get one, relief rally, it's mostly priced in. Even if one gets delayed further, it's widely discounted. I think this is working itself out as we speak, Scott.
Yeah, I agree with you. I feel like, we say blue skies ahead. That doesn't mean we're automatically going to, see this thing take off. We've done a lot of great work so far in this equity market. I think what happens is we can get back to business. We get back to the fundamentals. We get back to looking at what's going on in the market and some stocks that are doing well, some that aren't. We can get back to talking what we normally talk about instead of having to worry about, what do I want to invest in? And by the way, what's oil going to do that day? I mean, that's really what it's been. So when we can take that oil question off the table, or at least show that we're making some progress there, I think we get back to normal. What do you think about that?
Well, I do. I think it is a return to normal, but I think it's going to be a return to normal in a whole bunch of ways. You and I have talked about our 6 for 26, parts of our outlook. And, one of those, number 6, is returns come back down to earth. I really do think it's going to be tough to have the large multiple expansion that we've seen, which means we're completely data driven on earnings to go ahead and justify the current cost structure. That is the multiple of the S&P 500. But listen, are we going to get some seasonal weakness sometime between the summer and the midterm election? If history is my guide, and it's the only guide I have, it tells me we will. But there are brighter days and brighter skies ahead. And the biggest secret, again, is that no one believes in this market. No one believes in this rally. But if you look at the numbers, it is, in fact, a data-driven rally. It makes sense. And boy, America, I'm just reminded that America is in a good place right now.
You're right. I mean, it's good to see some of these big analysts that say Morgan Stanley and Bank of America, all the guys, the smartest guys in the room, they say. There's been a lot of folks that have been poo-pooing the rally, not saying that it's not real, but you know what? We need that because that's been fueling us higher. Once everybody else gets on board, you got too many guys on one end of that seesaw, it doesn't really work out for you. But you know what? Your earnings comment is 26%. I mean, that's going to be hard to recreate. I don't think. And you know what? That's coming off of 13 and 13 and 13. I mean, we're going to have a little bit of a come to Jesus, and things are going to come back down to say something that you can get your teeth around. But it's still. I'm not going to discount the fact that this is one of the better setups, one of the better investing environments I've seen in my entire career. Now, some people are calling it the fourth industrial revolution. You call it what you want. But even I just saw Jamie Dimon getting interviewed on television before we came on air, and he's in agreement. I mean, there's some fantastic things out there. And yes, we might lose some jobs in the beginning. Maybe we replace them in the end. There's going to be some disruptions. Everybody has to go through that. I think he said something that is really appropriate for this channel, but he made the equation equal to 40 million people 100 years ago used to work on American farms. Now it's only 1.5 million. So what happened to all those people, right? They're not in bread lines. They've figured out what to do. They've moved into the cities. They've done something. They've adapted. So in the beginning, we're going to see some disruption, I think. But as things mature, Americans adapt. And I'm hoping that these UBI or universal basic income stories don't come to fruition, because another thing he talked about, too, which I really, really sign up for, is we need a purpose. Everybody needs a purpose, and that's what humans like to do. They like to feel like they're doing something, and we don't want to take that away from them and just give them free cash, because that doesn't work out either. What do you think?
No, everybody needs to have a purpose. As one of my business partners said, now is the time to get into an athletic stance and be ready to innovate, adapt, or, adapt, improvise, overcome, whatever that gunnery sergeant said, played by Clint Eastwood in that movie, Heartbreak Ridge. But my comment here is this: if you're still on Recession Island and you don't believe in the renaissance of this U.S. economy and U.S. market, you better get involved. Does that mean you should chase at these price levels? No, probably not. But any and all pullbacks are going to be great opportunities to get in. And this is not
Yes.
just limited to the obvious Mag 7. Remember that, everybody. There's a great revenge story going on of old economy stocks. So don't look past those industrials, those materials, those energy names. I think they have a place. I think you can make an argument for small caps if we are, in fact, going to have an accommodative Fed. And best of all, can challenge the conventional wisdom of just the tried and true 60-40 portfolio, because it's evidence to me, evidence to many, that we need to start focusing not just on nominal returns, but real returns. And that's adjusting your portfolio to protect what matters most, which is your pricing power, because de-dollarization, I got news, that trend is not going away.
I agree. I agree 100%. One thing I wanted to get your opinion on before we go, change subjects here a little bit. It got a lot of press this week. These Trump accounts, these $1,000 Trump investment accounts that for children. Are you a proponent? Do you like them? I mean, there are some people that don't like them, but I was wondering where you stood on that stuff.
I'm a huge fan. Listen, the Trump accounts don't replace anything you're already doing. A Trump account is not a replacement for an IRA or a Roth IRA. A Trump account is not a replacement for a 529 college savings plan. But a Trump account is an opportunity to enhance the wealth of the next generation. Because if you're born between 2025 and 2028, you get a guaranteed $1,000. How does anyone pass up free money? Oh, for everybody else, the idea that you could seed an account for $5,000 a year for someone under the age of 18, allow that account to enjoy the miracle of compounding, the eighth wonder of the world, and invest in dirt cheap, low cost index funds to participate in slices of America. Do you know how much that's going to be worth? And you've got off ramps to enhance college spending, off ramps to use this money to be earmarked for retirement. We should do a separate segment, Scott, just on Trump accounts, because they go live July 4th in terms of the funding. The account shells can start being opened on certain platforms here this coming week. And I think everybody should learn about it. And yeah, maybe there's some criticism that the president shouldn't put his name on it, but everyone loves Roth IRAs, and those were named for Senator Roth. So who cares whose name's on it? Get informed, get educated, get empowered, and everybody should be looking at Trump accounts.
I agree, and I'm going to end it with this. I don't know what you think about it, but maybe you'll agree or disagree. But the stories about 2032 and 2033, when Social Security may run out, or at least you're going to take a haircut of 20-25%, depending on what article you're reading. I think this is a great way to start educating people on how to manage their money, so that when it will help allay those fears, and it will help people take more control over their future rather than having to rely on Social Security, because that's going to be a problem. So I like the idea of giving the power back to the people through these Trump accounts. So these kids that are being born, between 25 and 28, they'll understand money, and they'll be taking a lot more into their own in their own hands and taking care of their own situations, rather than trying to rely on a government, your money coming back to you, but the government spends it all. So keep it out of their hands. Learn on your own. I think it's a great way to educate these kids as well. What say you before we go?
Yeah, anytime there's a catalyst for change, let's use that catalyst for change to empower people. I don't think Trump accounts are going to be a model to the privatization of Social Security, but I think Trump accounts are an opportunity for everybody who understands what's going on, and everyone who suspects there's going to be tremendous change. If you can get people started early and just go through the math of even what a single $5,000 deposit could grow to over a 50 to 60 year period, it's amazing. Trump accounts. Get retired. Get retired. StayRetired.com. Get retired. StayRetired.com. Right. Download your free Trump guide today, Scott. That's how important it is.
Awesome. There we go. All right, Craig. Love having you on. Have a great weekend, brother. Really appreciate your content. Craig Bolanos. He's a co-founder and wealth advisor at VestGen Wealth Partners in Chicago. All right.